Yo. What's going on, man? What's going on? What's going on? What's going on? What's going on? Y'all pull on up in here. Pull on up in here. See the Black Al Davis up in here. What's happening? What's happening? Trying to get it set up so I can see the chat over there. If anybody pull up in here, I got the Discord open and I'm in the voice. If anybody want to pull up inside the Discord, I got the chat over there, so hopefully I can see the Discord chat. Like the intro, Tim, first time I seen it on time today. Okay, Thomas say he on time today. This first time I seen it. I had to make that intro music. That's intro music I made myself like a while back because I was using some royalty-free music, and when I used it, it was like it was like your video cannot be monetized. It ain't even give me the option to like copyright split with somebody. Now I said royalty-free music for YouTube. I got it off YouTube, royalty-free music for YouTube, but when I used it, it was like it wouldn't let me monetize my video. It ain't even give me an option to split royalties with them. So I was like, you know what? I'm just gonna use my own music. Went in there, got my Let's Talk About It theme music, put it on there, and it's a wrap. We're gonna get, what's up, Marco? We're gonna get a couple minutes, let people pull up in here. It's 7:04. We'll give it a couple minutes, let people come up in here, and then we'll get right to it, man. We ain't gonna procrastinate a whole lot tonight. Man, for those who don't know, I was enjoying speaking of the devil, I was about to say something. I was enjoying my time being in my lovely getaway community by myself amongst people I don't know. And first, I was infiltrated by Deborah. See the hello up there? Deborah was the first one to infiltrate me. And then today, while I'm sitting there on the live stream, hanging out, being me, I notice Felicia's in the comments. I said, Felicia, how in the world did you find me? She gonna talk about something. You like Coach Prime. You ain't hard to find. I said, come on, man. I can't have nothing to myself. Hey, man. It's all jokes. It's all fun and games, man. It's a good community over there, man. I like it because it's like I could just be me. I can go over there just me and just talk to other people, and ain't nobody looking to me to be the mentor. They don't know who I am. They don't even know. Somebody spotted me in there one time a while back, and the guy that run it, he was like, "What's going on? What was this? What's going on with Tim?" I think that's when Deborah was in there, and they was people talking, and then he was like, "Oh, Tim, I didn't even know you did that. I just subscribed to your page, right?" And I'm like, shh, don't be outing me. I don't want people, when people find out, they go to trying to ask you questions no, man, I'm just trying to be me, man. I don't think it don't have a name. It's just a dude name, Tremaine. It doesn't, like, the community don't have a name. His name just Tremaine. Tremaine Trades, that's his name. Cool young dude from Texas. You know what I'm saying? Cool young cat from Texas. You know what I'm saying? I oopsed up on his YouTube channel a couple weeks ago, And soon as I oozed up on his YouTube channel, like 2 days later, it's like he had like a special for like lifetime access to get into his Discord for a one-time payment of $100 to get in for lifetime in his Discord, and you get access to everything. So I was like, man, I like this young dude. He doing good. I'm gonna support his community. Plus, that'll give me a place to go let down my hair and talk to other traders and not have the responsibility of trying to teach someone. You know what I'm saying? Because it's always important, like as a trader, to like have a community. Let me go full screen and talk, man. It's always important. What's up? Building manager? Howdy from Boston. People in Boston say howdy. I thought I would assume you would have been from Texas or Louisiana somewhere saying, or Texas, saying howdy. Howdy, partner. But it's important to have a community where you can, you know what I'm saying, talk to people, because like a lot of us, most of us, like our families don't know about this. You know what I'm saying? Except for Deborah. Tim, do you think about CRT? What is CRT? I guess I don't think about it because I don't know what it is. What's CRT? Tim, what CRT is, and then I'll let you know if I think about it. Deborah's husband, hey, he know this backwards and forwards, so she got somebody to talk to about it. But most of us, we ain't got nobody to talk to about this, man. So it's important to have a community like the gang, where you can just chop it up with other people who do this right here. But like as me, you know what I'm saying, as a mentor, as the person that leads the community that is sharing my understanding of these ICT concepts and trying to help other people get their aha moment when it comes to using the concepts, you know what I'm saying? It's like sometimes it's like a burden that you know what I'm saying? It's like when you interact, people are just looking for like advice. They're looking for you to guide them. But when you got a community where you just go in and chop it up with people, it's a nice escape. You know what I'm saying? It's a nice escape, and it's important to have somewhere to, you know what I'm saying, be able to talk with like-minded people, right? Repulsa, what's CRT? Do anybody know what CRT is? Repulsa said, do you think about CRT? What is CRT? Current return time. Nope. Central rambunctious thugs. Nope, that ain't it. Check right there. Oh yeah, I'm all about check right there. My check need to be right there. I don't know. Do anybody know what CRT is? Come on. I don't waste enough time. Let's get to it. Do anybody know what CRT is? Deborah, you smart. What's CRT? CRT in trading. CRT and trade, candle range theory. No, I don't. The only CRT Romeo, is that a person? Candle range theory. No, I do not. What's up, Rhonda? I do not think about candle range theory because I do not trade anything besides ICT concepts. Give me a minute. That's Ario. I know Ario be talking about fair value gaps. Is CRT Romeo a person? Romeo OTPT. So, but this guy right here, I've never heard of him. Don't know anything about him. CRT is the power of 3. Okay. All right. Appreciate the info. Never heard of CRT. CRT is the power of 3. Now, I use the power of 3. Right? I use the power of 3. I just like all the other ICT concepts. But I've never heard of candle range theory. Okay, let's get to it. We're gonna look at what y'all want to do today. Y'all want to do the whole day from 6 o'clock last night until 4 o'clock today, or y'all just want to do? What's up, Irma? I see you in the Discord.
I'm supposed to be in YouTube. Oh, all right.
No, you can. I mean, you can. I share the screen in there. You can watch in there. You can watch in there, and when you're inside the Discord, you can unmute and talk. You can be like, "Hey, Tim."
All right.
Yeah. So it's up to you, whichever one. I just hadn't shared the screen cause wasn't nobody in there. But I'm sharing this. Can you see the screen now?
Yes, I can. Thank you.
You're welcome. Okay. And if you got anything, you can just say, "Hey, Tim, I got something." Just interrupt me. Don't mind. So, I think he talks about it. Okay, Deborah. Deborah all over the place, man. Deborah know everything, man. Deborah know everything. What y'all want to do? One in the chat if y'all want to do the whole day from 6 o'clock last night to 4 o'clock today. 2 in the chat if you only want to do New York session. Ready, go. Irma, what you want to do? The whole day or just the New York session?
The New York session. No, actually, no. I need the whole day. Thank you.
Okay, I see a few people putting in ones. Few other people saying the whole day too. Few other people saying the whole day too. They be acting all shy to type stuff in the chat. What y'all behind or something? Now I know it's like a 3-second delay. I checked that. It's like a 3 or 4 second delay. And in Discord is immediate. It ain't no delay in Discord. Nobody fingers working. Nobody typing. We're gonna do the whole day. Let me get this new candle that's starting out the way. Boop. Get out of there, you new candle. All right. I already updated my chart with the high and the low of the day. So let's go back and put the high and low of the day back on yesterday. I mean it's yesterday now, but on the candle we about to look at. Yeah, on yesterday. I said it right the first time. So I can hide this. Hide. Oh, don't hide. Hide. And then we'll get this and make this and just put low of day. My mic is in the way. The low of day. Then we'll get this and put high of day. High of day. All right. Top. If anybody wondering what this fib is right here, that's that Sibby over there. And I got it in the 4th grade. All right. And I went in and marked it out so I know what it is. All right. So I know what it is when I'm on my lower time frame. All right. I don't need today. So I hide that. Hide. Hide. Okay. All right. And everything else is there. Let's check anything on the 4 hour we want to mark out. want the stuff that I'm working with now. Okay, do we want to mark anything on the 4 hour? Got this 4 hour stuff here that we blew through. Came down into this order block there. All right, came down to that 4 hour order block. Since I already got this new day opening gap down there, I'll mark out the last down close candle of the 4 hour order block. I'll do that. Since I got the new day opening gap there, this is the whole order block right here. Right? But since the order block is overlapping with that new day opening gap, let me turn my fancy dancing on. Oh, my computer restarted. My fancy dancing ain't on. Y'all hold on, let me go get my fancy dancing. Whenever my computer restart, the fancy dancing don't just automatically come on. I got to go restart it. Well, it don't come on with my shortcuts. Right, I got to go restart. Now I can turn it on and off like this. But okay, so see, this is the whole order block here. All right, that's the entire order block there on the 4 hour time frame. But since it's overlapping with this new day opening gap there, I don't want that to overlap like that, so I'm just gonna highlight the last down close candle. But as you see, when I put that there, see how we went just below mean threshold of that order block right there. Make it big so y'all can see it. Everybody see that? We came down just below mean threshold of that order block right there. You know everything. You know about Romeo. You know about CRT Romeo. You know about Ario. You know about Tremaine. You know about everything. Hola, Valentin. Buenas tardes. Buenas tardes, Valentin. So it went right below mean threshold of that order block. Let's look at it body to body. You want to see me body to body. Same thing below mean threshold, right? So that's the whole order block there. We see that we went. Let's do this right here. Let's do this right here. We're going to put a line there, and the mean threshold is 20,260 even. And then we're going to take the box, and we're just going to put the box around the last down close candle. So we'll know we're inside there, but we can see that it went just below mean threshold for the entire, because we can see how it interacted with that. Let's put this right here. Let's put some quads on this too. Put that quad on it. That quad. Who know what quad is? Somebody tell me, everybody in my generation. There go Felicia. We were just, bye Felicia. Bye Felicia. We were just talking about you because you done found me in my sanctuary. Bye Felicia. Giggy gone. Who know what quad is? Anybody in my generation should know what quad is. What's quad? Somebody tell me what quad is. Ain't nothing funny, Felicia. Who know what quad is? What's quad? No, not 4. Quad. Ain't nobody here from the South. Who in here from the South? Music. What kind of music? What kind of music? Bass. There you go. Quad. Got that quad. That knock. Yes. Gotta have that quad in your trunk. Put that quad on it. Right there. So, there we go right there. We see that we came down just below. Now I can move the box out the way. And now we got the bullish order block graded. All right, we got the bullish order block graded. And if I come, where are my little, it should be, there they go right there. I got this reversed. I got this reversed. I got the numbers over there reversed. So I'm going to take the numbers off. I'm gonna have to take the labels off because I got the numbers reversed. So let's go ahead and take these labels off like that. Now, right, because I had it reversed. I had like I didn't pull this the right way, so it had 75 up there instead of 25, and so I just typed it in myself and redid it. So now that's the 4 hour that I wanted to mark out. Yes, that's the 4 hour that I wanted to mark out, and then go down and see if we want to mark anything else out. Friday. I'm gonna mark out 6 o'clock. So, all right, we'll mark out. See this range right here, right? Since we was inside that range right there, we're gonna mark this out right here as our dealing range coming into the day, because that's where we opened up at right there. That's the highest high, that's the lowest low as we coming in to the day. So we'll put a low there, mark that as sell side, external. Right, we already got our daily high, so the daily high, the prior day high is the the buy side. Gonna make this bigger so that we can see it, so y'all can see what's going on. Ooh, that's big. Put it at 12. Try this at 12. All right. Y'all see them? Y'all can see them numbers better over there now, right? Hopefully you can. Hopefully you can see them numbers over there better. All right, that's our sell side right there. This is our buy side right there. Here at the 50, I got a line there already. The 50% of that daily SIBI, we see that that's some internal sell side. I ain't gonna bother marking that right now. On the 60 minute, I'll go see what it look like on the lower time frame. Got a high up there. All right, so we can look at this right here as internal buy side and sell side for the dealing range. Right there, we go ahead and mark that out. Matter of fact, let's do this right here. I said I wasn't gonna mark it out, but I did. Internal. Let's make it dash too, so we can really know the difference between which is which. Okay. All right. 15 minute. All right. 15 minutes. Okay. So coming into it, this is our range here coming into the day, right? Then we open up here, right? We see we got internal buy side there, okay? And then we come down And we set some internal sell side. All right, set internal sell side. And then come back up and we make equal highs, relative equal highs inside the range. Okay. All right. Okay. All right. So let's look at a quick overview on the 15-minute. Then we're going to go down to the 1 minute and get into the weeds of it. Get into the weeds of it. Okay, so looking here, we open up here, right? This 4 p.m. low right here. We drop down below that 4 p.m. low there. That's time-based liquidity. Remember, we always talk about time-based liquidity. So we open up, we trade right there inside that 330 bearish order block, come back down, and then drop down and take out this time-based liquidity here. What makes that time-based liquidity? Well, that is the low from a prior session. That's a low from the prior session. We drop down below this low from the prior session. We also look like we drop below these equal lows from the prior session. What's the prior session? The prior day afternoon. Right. What's up, Rallo? Shout out Alan West in the building, man. That's my homeboy Rallo. Shout-town. Hey, so we drop below that time-based liquidity right there. And then we push back up. We don't take out the high that was formed at the open. Right? We don't take out the high that was formed at the open. Let's mark this right here. Okay. We don't take out the high that was formed after dropping down below this time-based liquidity. We push back up, and we do poke above the short-term high right there at 745. On this 10 p.m. candle, we do come above the short-term. Do we make an equal high? Do we go above it? Yep, we poke above. Let me make this big so y'all can see it better. All right. I don't want nobody struggling to see. I want everybody to be able to see it clear. Well, we come above the short-term high that was formed at 745 on this 10 p.m. candle. All right. And then we trade back down, taking out the internal sell side that we had created. Remember I said we dropped down. After taking out the low, we created some internal sell side inside our dealing range, came back down, tapped the internal sell side, consolidated there, just from 245 up until 415, and then we dropped down, right, digging deeper into the sell side, coming down to consequent encroachment of the daily SIBI that we had marked out, right? Marked that daily SIBI that we had traded up into on the prior day. I believe we traded into it on the prior day. Yeah, right here. This is the SIBI low. We traded up into it, came up above the upper quadrant. This is the upper quadrant here. And that's what we were kind of consolidating there around that upper quadrant, in between upper quadrant and consequent encroachment. All right. Came down to consequent encroachment. Then we pushed back up, right? Creating an inversion fair value gap right here. Right, created an inversion fair value gap right there. 415 SIBI. Right. And again, Remember what we always say whenever we see a bearish PD array created in the discount of the move, right? You anticipate it to become an inversion. And if you are, what do we say about this right here? If you are bearish and you see a bearish PD array created in the discount of the move, right? If you are bearish, participation time. If you are bearish and you see a bearish PD array created in the discount of a range, right? What do you want to see happen with this, right? If you are bearish, you want to see price do what? We just talked about it. When did we talk, Deborah? When did we talk about that? Was that on a public video or was that on a pop-up? I think we talked about it on the pop-up on Monday. Was that Monday when we here to learn and share? When did we talk about that? Was that a public video or did we talk about that on the pop-up? What's the day? Today, Tuesday. So here to learn and share on the pop-up. Okay, Monday on the pop-up. Thank you, Deborah. Since you know when it was, what do we expect? Deborah, pull up in the Discord and tell me what we supposed to be what we expect out of that. Irma, you up in there already. Irma, was you on the pop-up?
No, I wasn't.
You wasn't on the pop. You show Irma. You just saying that because you don't want to answer.
No, I wasn't.
Okay, here to learn and share. I gave you the first part. We anticipate it to become an inversion, right? Why do we? All right, Irma, let's walk through it. Okay, mute YouTube, Deborah. Mute YouTube, Deborah, and then talk. Deborah got the TV up real loud. Deborah, this is your conscience speaking. What's up, Sherwin? Deborah, mute YouTube and then talk. All right, so Irma, why do we anticipate this to become an inversion?
Because it went down, and then if we're going.
Don't overthink it. Don't overthink it. Don't overthink
All right,
it.
so we wanted to go back up to create the opposite side of it for that fair value gap.
Yeah, but it keep it simple. Why it's creating a bearish fair value gap? Where is the bearish fair value gap created at in relation to the move?
Oh, on the downside, going
What's the downside called?
I don't know.
What's the top called? You got the top and the bottom. Discount is create. We got a bearish fair value gap created in a discount, right?
She got phone a friend.
Yeah, phone a friend. Now, if we are bearish,
Thank you.
if we are bearish, right? If we bullish or bearish, we want to see it become an inversion fair value gap, right? If we're bullish, we want to see it become an inversion and it be used as support and we just keep going. If we are bearish, what do we want to see? We want to see it, here learn she already said, become an inversion. And then what do we want to see after it becomes an inversion? We want to see price do what?
Come back down after it goes up.
Goes up and does what?
Probably get those highs at the top.
And what we call that when we get the highs?
The swing high, those equal highs.
But I'm saying, what do we call it? When, yes,
Liquidity.
get liquidity, and then do what? So inversion, get liquidity, and then do what?
Come back and drop back down to go get the other.
What do we call it when we drop back down over here? When we drop back down, in this case below it, what do we call that? We're doing what?
That's when we drop below, we're going for
resistance, Miss Irma.
Oh, thank you.
Nuh-uh. Phone a friend leading you astray.
Oh, we wanted
Oh,
to reclaim
reclaim.
it. Yes.
Oh,
Yes. So if we're bearish, right, and we create a bearish fair value gap here now, and the reason why I say this is what we wanted to do, because this is going to afford us a better entry, right? Because price has moved a good little ways, right? And let's just say this is our target, right? But if we go back up, invert this and go take liquidity, now it's giving us an opportunity to get short much higher than down here. Whereas if price just come back to this and start to drop here, right, now we got to it just accept getting in here, right, and then going down. But if we create an inversion, it make a bearish fair value gap in the discount. We want to see it inverted, go take liquidity. It can be this liquidity, it can be that liquidity, it can be the overnight high like it did. It don't matter. It go take some liquidity and then give us a setup to come lower. Okay.
and now we would take our entry up there because that would be like the premium area.
We
Since we're
it's we're just looking for the best entry, right? We always
okay.
want to sell in the premium, buying a discount, but price could come in, like price could treat this as a balanced price range, don't go back up there, and then give us a premium and discount here. Like this would, if we like if we came down here and went back up there and then dropped there, now you got a premium and discount here. That's your premium you would be looking to sell there, because price is using that as a balanced price range and don't want to go back up there no more, right? But if price decides to go up there and take out liquidity, now it's giving you an opportunity to get inside a range over here or even further down, like over here. It's giving you a better opportunity to enter at like a even higher premium, right? It's giving you a chance to get in at a higher premium than if it just created a new premium down here. You understand what I'm saying?
Okay. Yes.
Yeah. So whenever we see them discount PD arrays, them bearish PD arrays made in the discount, right? We anticipate price getting back above it, taking out some liquidity, right, to fool people into going long, because that's just engineering more liquidity. Because anybody who got forced into the market here on a breakout, right, their stops is down there, right, and up here their stops is down there. Stops could be there. They could be trailing them as price keeps going up, right, and then once price comes up here and takes out the overnight high, bam, rake them over the coals, took them out the game, right, took them out the game. Didn't even give them a chance to even try to think about it. Dropped really, really quick. Okay.
Now, a question. What that reclaim? So what is so it reclaimed?
The fair value gap right here.
Oh,
Right.
okay.
Any like Michael got anything can be reclaimed, right? He got two different ways of reclaiming, right? Y'all, do you remember when I talked about the two different ways of reclaiming? I was like, one makes sense in my mind and one really don't.
Yes.
Okay, you remember which one made sense in my mind?
No.
This is the one that
makes
this is the one that makes sense in my mind, right? Because, and the reason why is because, right, we got a bearish fair value gap and we get above it and create an inversion. Then we trade up and then we come back down below it and we come reclaim it and go. Right now, another way of reclaiming is like if we get below this right here and we hit it and we go down, we don't take out that low and then we come back up to it again and go down. That's reclaiming also.
Yes.
You see what I'm saying? That's reclaiming also, but this don't make sense in my mind as reclaiming. I look at that as just trading back to it, but he called it reclaiming. But did like coming up and then coming back down, that makes sense as far as reclaiming, because before he gave us a fancy term of inversion fair value gap, I used to just say, okay, we on the top side, expected to be support. We on the bottom side, expected to be resistance. So like getting up there and then reclaiming it, like now you're doing a different job and now you coming back and you reclaiming your real job. That's what makes sense in my mind. You see what I'm saying? But coming to it, leaving it, and then reclaiming it, that's it. You got two ways of teaching reclaiming, right? Just remember that, right? So, yeah, and you see that's 15 minutes, and then it dropped down and went down there, and then consolidated for the most of the afternoon, and then dropped down one more time, coming down to the mean threshold of that bullish order block right here on the 330 candle, and finished out the day and consolidating it right there at that old new day opening gap from September 27th. We also came down to a new day opening gap from October the 9th, right, when we dropped down here and then finally reached down and touched that. Now let's go into the weeds in the 1 minute. Right, let's see what the price looked like throughout the night with the 1 minute. Look at a little more detail. Detail my bell. Hump, baby, hump, baby, hump, baby. All right. So looking at the 1 minute, right? Same info there. We're just gonna focus on like the key levels before digging in and see exactly what it's doing. Let's find the exact open. So this is the open right here. We already know the open is like a couple ticks off. The open is at 638.75, and then the high was at 647. So 1 point. The open was 1 point below this high right here. What was this right here? High of day. Okay. So the overnight high, right? That overnight high is 1 point. The opening is 1 point below that. Okay, so we see here we drop down at what time? 6:42. All right, and we can mark this out as the initial sell side right there. All right, so that's our initial sell side from the opening at 6. All right. Okay, that's our initial sell side. And then let's find 7 o'clock real quick. This is 7 o'clock here. All right, that's 7 o'clock. So this right here, that's the high, but we can look at this right here as internal buy side, right? So that's our high, right? And that'll be our initial buy side. We already got it marked as the overnight high, our initial buy side, our initial sell side created within the 6 o'clock hour. All right. So that's our initial buy side and sell side. We got internal buy side here. Right. We got internal buy side here because this right here is our range from our opening range from the 6 o'clock hour. That's your lowest low. That's your highest high. Right. So this right here will be internal buy side. Right, internal buy side, right there. We'll put this in the middle, and we'll make that green. Okay, so got internal buy side, right, and that's our sell side, initial sell side, right there. 7 o'clock, we go up and we engage the buy side. We engage the internal buy side, trading up into the 607. SIBI, and looking here, we can see that we have an inversion fair value gap right here. We got a lot going on here, right? Boom, inversion fair value gap right there. That's a bullish fair value gap on 1 minute. 1 minute inversion fair value gap, and that's at the, what's that right there? 603 candle. Right. Okay. So trade back up. Engage the buy side, trade up near the high of the 603 inversion fair value gap. As we can see, all of the bodies are respecting consequent encroachment of the 603 inversion fair value gap right there. All right, all of the bodies respecting the 603 inversion fair value gap there. And then now this right here is our new internal buy side right there. See how far we go. Yeah, right there, that's good enough. Okay, I can stop here because it don't go no higher than that right there. All right, so and then we come down, get a breaking structure there. We got relative equal highs right here. Drop down, take out relative equal lows, and get a breaking structure right there. So if we come here, right there, see this right here, these are relative equal lows right there. After we drop down, get that breaking market structure, create, when we come down, create relative equal highs, drop down, right, breaking structure, take out, come down, breaking structure, come up, then take out the relative equal lows. All right. Right there. Okay. Then once we get that, we got SIBIs and volume imbalance. We got a whole liquidity void there too that we never trade back up to. All right, we drop down and take out this sell side right there. Some more internal sell side. We got equal lows down there. Do we hit it on? Yep, tap that right there also. All right, so we take out, I'll leave that up there. I'll just copy it. All right, all of this is internal sell side right here. All right, all this is internal sell side coming down here because that's our lowest low from the initial sell side, right? And then, but we fail to get back up here to the breakaway gap. We drop down, finally drop down, taking out the low, and then we kind of consolidate in here. This right here is a little 52 fake out right there. Let's look at this right here. The reason why I say this is a 52 fake out is because when we drop down and we tap that low there, right, we got a nice rejection off of it. Come back up on this 810 candle right there. So from 750, right? Let's put this on. Let's put this on. 1950 to 2010. No, 22. All right, so right here inside this macro window here, all right, that's when we went up, created relative equal highs, dropped down, right, took out the low, pushed back up into the imbalances here. We got volume imbalance, SIBI right there, right, respect consequent encroachment of the inversion fair value gap, right? Drop down, taking out the sell side, come all the way down, take out the sell side right here. And that's why I say this is a 52 fake out, because we've run all of the sell side, all of the internal sell side, and then we got a nice rejection off of this right here, right? And then we push up, then we drop back down and don't take out the sell side, right? And then we trade back above this high, right there. That's why I said that right there is a little 52 fake out. Right there. That's a 52 fake out right there. If you were looking for a reversal, if you was not bearish, if you were bullish, this right here could have faked you out because we swept all of this trend line liquidity, right? Left the low intact, right? Just like we left the high intact, okay? Right? Left the high intact, came down, swept all this trend line liquidity, left the low intact, and then started trading back up above that high right there, right? Consolidated there, and then came down and took out the low again over here later on, and then we came down and continued down, right? So that right there could have faked you out, right? Just looking at what it was doing on this lower time frame. When you look at it zoomed out, you can see that it was just inside a little consolidation, and then we attack the lows, pulled back up into the range, and then continued down. But just if you were not on the right side, that right there could have faked you out, right? Just based off what it did by taking all of that liquidity, right? Taking all of that liquidity there, rejecting off of that low like that, right? Because that's a strong rejection off the low, right? This candle, right, went below that one. This candle poked below this one and then rejected all the way back up like that. That's a strong rejection off that low. So, when you see strong rejections like this right here, what can you look for not to get faked out, right? This right here, this price action right here, that's a clue. That's a clue right there that this may be a fake out, right? Do everybody understand why I say this price action right here is a clue that this rejection may be a fake out to make people think it's going long because somebody got forced into longs coming above that high? Do everybody understand that, or do anybody got a question about that? No questions? No questions? Okay. Moving on. All right. Then we came down here at 832, took out the sell side, traded back up into the range, into the imbalance, right? Came to the imbalance, pushed up, overshot it a little bit. It's a little sloppy, right? That's a little sloppy there, how we came that high above this imbalance. Then we dropped down, took the sell side again. This one is a little more clean. See how we pushed up into the fair value gap, traded up, right, into the order block, and then dropped, right? Look at this delivery to the imbalance here as opposed to this delivery to the imbalance there, right? We came into there, consolidated in there, pushed up again, came all the way up above, right? All of this right here, that's kind of sloppy to me. Whereas over here, right, when we traded down and took out the liquidity, right, we pulled back up. This candle here came back up into the fair value gap. This candle pushed up one more time into the order block here, right, and then dropped right away. Right, dropped right away. And that was just before we got into the macro time, right? Just before 8:50. Okie dokie. Then we set a new intermediate low. An internal low, internal sell side for our range, right? Because remember, this was our entire range here, from that high to that low. So this is our external sell side. This is our external buy side up there, and everything that we're setting in between there is just either more internal or buy side or sell side. So we come down here at 846 there, set that low, right? Trade back up, take out. Hey, what are you doing over there? Right, take out this high here. Let me get a high. Buy side line there. Come on. All right. Come over there. All right. Push up. Right. Make relative equal highs there on that 914 candle. This macro time right here, all we did was pretty much consolidate. We made the move going into the macro time, right? We dropped down, engaged the liquidity during the macro time. So in this macro one to here, we consolidated, and then at the top of the new hour, the second half of the macro, price began to spool up, and we came up into the inefficiency right there, right? Price started to spool up, coming toward the inefficiency, and then we finally came up and made relative equal highs just after the macro time was done, and then we traded over and then took out this internal buy side, right, and pushed all the way up and took out that buy side that we had created, those equal highs. Remember back here during this time at during the 750 to 810 macro, when we created those relative equal highs, and then we dropped down and started taking the sell side right here during this is during the New York session here, when we came into the 950 to 1010 macro, right? Price went up and engaged that buy side there, right? Taking out that buy side there, and then we traded after hitting that during the 950 to 1010 macro, we dropped back down and just kind of consolidated. We did drop back down and take out the short-term sell side, consolidated there a little bit, traded back down into this 937 BSC right there. Let's go find our for this 930 here, 930, 938. So this right here, so 933. So this right here. Oh, this PM. I'm tripping. It's PM. I'm looking at this like it's AM. It's PM. Y'all forget what I was talking about just then. Right? Traded up into that buy side there. Just kind of consolidated there for a while. Didn't do much. Traded back down into that 937 BSC. Right, just kind of consolidated there around the 937 BSC here. 11 out the 1118 dropped below the lows, taking out the sell side under there. Displaced back up to that inversion fair value gap. Traded back down into that 1126 BSC. Pushed back up, respecting consequent encroachment of that. We just kind of consolidating. Right, we consolidating in between this 937 BSC and that 603 inversion fair value gap. All right. Let's put this on here so I know what that is. Up, wrong thing. Okay. Price is just ranging in between that 603 inversion fair value gap and this 937 BSC. So we're using it as support here during this macro time there, right? And then we're using this as resistance. And as we come down, we can move these over some now. All right. So that's 11. All right, let's come here and go 23, 50 to 0, 0, 10. 0, 50, 2, 0, 1, 10. 2, 0, 3. Okay. All right. So, see how we come up, take out that buy side, but respecting consequent encroachment of the inversion fair value gap. Then we consolidating up here in the premium of this little range here that we've made, right up there around the upper quadrant of that range there, consolidating there in the premium, come down, touch like equilibrium of that range, and consolidating some more around the upper quadrant of that range, and then we give up the ghost, dropping down, taking out the sell side below the 1158 low there, and that's at around 130. Right, it dropped here from 125 up until 130. Then we kind of consolidated there. Now that we got this inversion fair value gap here, so the 937 BISI that we were using for support, right, we've dropped down, created an inversion fair value gap, and then now we use that inversion fair value gap to drop down lower, taking out the sell side again, right, during this macro time. Right, we dropped down, taking out the sell side. Let's see how far down we went. Taking out the sell side there, came right down to the tick, to that 9 p.m. candle from Monday right there. That 9 p.m. low came down to the tick to there, right? So making an equal low with that 9 p.m. low from Monday over here during this 150 to 210 macro, right? So we came down, spooled down, engaging this sell side, came all the way down, made equal lows with that low there, pushed back up into the range here. Nothing, came back up to that, wrong thing, came back up to that 154 SIBI. Right, so we pulled back up into that SIBI. What's significance of that SIBI besides it displaced away is created during a macro time. Right, so we got a macro SIBI that we traded back up to. All right, 1 minute. All right, put it over here, and that's at what I said it was 153. Is that 153? Get out of the way. 154. 1:54 a.m. Right. Traded back up. The 1:54 a.m. dropped down, created relative equal lows, traded back up into this 236 SIBI right there. I'll mark it out. Getting tired of marking out SIBIs and stuff, but I'll mark it out just so we can see. Annotating the important levels that price is reacting to. Right there. What we said it was 236. $236. Right, 236 SIBI. Right there. Drop down, engage the relative equal lows that we created. Remember there? When I said we create them relative equal lows there. Right, based off of that O. So that's another. Right, so now looking at this right here, we have this. I don't have a sell side line. Okay, there you go. Okay, so now looking at this right here, we got that low here, right? And then we come down and we make that low there, right? And then we come down and we make that low there, right? And then we come down and we make that low there and push back up. So now we got 1, 2, 3, 4 if you count that, but that's a triple bottom right there. So that's looking like what? Very, very strong support, right? That rejection up right there. And then, but this time, instead of getting that strong rejection up and then we dilly-dally some, right? We got that strong rejection up and then we immediately, bam, took it out. Right there, took out that sell side, right? And then a couple counters later, gave up the ghost, trading back down. And this right here was, I think that was consequent encroachment of the, no, that's sell side. That's the sell side right there. All right, came down, took out the sell side. All right, now we have my boom, came down to the internal sell side before the consequent encroachment of the SIBI. All right, came down, took out the sell side, traded back up. Where do we go back up to? That inversion fair value gap from 236, right? And then this right here, this drop down, that was during the 250 to 310 macro when we came down and then wiped out that sell side during the 250 to 310 macro, right? Anytime you're looking at price setting up, right? Once it sets something up and then gets into a macro window, that's when you want to see like the speed during the macro window, right? If you don't see the speed during the macro window, then it probably means somebody got their hand in there on the button manipulating some stuff, right? But you want to see that speed, that moving during the macro time after like everything sets up, right? After everything sets up, just like here, let's just say if you were looking at this right here, we came down, we displaced down, pushed up to the inversion fair value gap. You didn't trust it to get short off the inversion fair value gap, but we dropped down again, right? And you say, okay, now we got this and this fair value gap there from that high to that the bottom of that volume imbalance, and you're like, okay, I'm gonna get short on that one because now I see that we've hit that one, right? Now I'm gonna get short on that one. Now it took a couple minutes, but it wasn't a lot because you got a lot of speed here, and then it did retrace a little bit, but you never went into drawdown, and then you got a lot of speed there, right? So you want to see that speed inside the macro window, right? You want to see that speed. And another thing that I've noticed about the macro windows, right? When you split them in half, right? When you split them in half, you see how like when we got halfway through this macro there, right? We came down, then we went back. A lot of times you'll see like a lot of dilly-dally, and then you'll see like the move after the halfway point, right? And in this case with this macro, right, this you got like you got a deep retracement, right? After we took out the sell side, right, we came back up and traded back down to this imbalance and then went up and took out some buy side, right? You got a deep retracement on the second half of this macro window right there. But, you know, start going back and studying that when you split the macro in half, because when you split it in half, you're going into a new hour, right? So going into that new hour, right, a lot of times you're going to see price. If price hasn't already ran liquidity, sometimes it'll give you a Judas swing, right, to then run the liquidity. If it already ran liquidity, sometime it'll, you know what I'm saying, do like a deep retracement, or it'll take some, you know what I'm saying, run, like do a Judas swing and continue down. It's like just go back and study that like halfway through the macro time frame. And again, if it ain't spooling towards some liquidity or an imbalance, somebody probably got their finger in there messing with the button. Just like we seen like that one macro time frame back here somewhere where price ain't really do much during the macro, just kind of consolidated. Yeah. All right. So then we came back up to the inversion fair value gap, took out that buy side there. I don't have any buy side lines. Give me a buy side line. Cheese and rice. I could be the made one by now. Come here, you. So we come back up, right? Take out that buy side, trade back down, take out this sell side here, but don't take out that sell side there. Right. Don't take out that sell side there. Right. Now, we come up, take out this buy side, then drop down. Don't take out that sell side right there. Who remember what I was talking about? What's the significance of leaving that sell side, right, and going back up and taking this buy side when you're bearish? What's the significance of leaving this sell side, going back up and taking out that buy side, right? What's the significance of leaving it down there? What is the algorithm doing when it comes down, leaves that sell side, and it's bearish? It's clearly bearish, right? It leave that sell side, and then it come back up here and take out this buy side. What is the algorithm doing? It's doing two things. Well, remember. What's up, Robinson? Listen to the soothing sounds of my gun flapping. It left the lows. It left the lower low to the left. Yes. That is creating. It is creating a high probability equal lows. It's doing that. But what's the two thing that it's doing when it create this relative equal low, then going back up and taking that set buy side? Right, what's the significance of that? What is it doing? It's doing two things. Need more fuel. Okay, need more fuel. What is, when it's going to get the fuel, what is it doing? Right, so we coming up here, we getting more fuel. What is it doing? It's doing two things. Right, when you come get the fuel, when we came up here, what happened when we came above that high right there? What happened? Running buy stops. But when you run the buy stops, manipulation, engineering liquidity, all of that. But when you run these buy stops, what happened when you poked up there? Right? You're running stops, but what is happening when you run them stops? Right? What's happening when you run them stops? Right? The first part up here, right? Putting people in the wrong direction. Yes. You're tricking people long, right? And not only are you tricking people long, what are you doing besides tricking people long? What's the second thing that it's doing?
Is it creating more liquidity?
It's creating liquidity. It's creating liquidity down here, right? Because when you trick the people long, they put their stops right there. But what is tricking people long, and it's also doing what? What happens when you run a buy stop for somebody that's short? A buy stop can do two things, right? What does a buy stop do? It's two things that it does. If you're not in the market yet, it trips you in. That's tricking people to go long when it's clearly bearish, right? What's the second thing that a buy stop does? If you're in a short position, right, and you got your stop there, what happens when the price go up there? Speak, Irma, speak to me.
Oh, I'm figuring that you'll think it's gonna go up, and then you actually.
No, I'm saying if you're already in a short.
Oh. Okay.
And your stop is there, what happened when the price goes there? Takes you out. Thank you, Valentine. Takes you out. So a buy stop is going to put you in if you're not in the market, and it's going to take you out if you're already in the market. Right? So that's the two things that it's doing. When it come down here and leave these lows, right? It's making people think, oh, that's resistance, right? It couldn't break that. Okay? And then so they got their stops there. They feel safe, right? And then people who looking at this saying, oh, we've come down too far, we're going to reverse, they got their stops there to get in. So now price comes back up, takes them out, puts them in, right? And then now when price drops back down and hit there, right? Now they feel safe here because they didn't get taken out, right? But the only thing price did was come back down to allow smart money an opportunity to put in more positions that they couldn't get filled up here. Because smart money has it's a lot of positions. So when it come above here, they're loading up as many positions as they can, right? Drop down, right? Take out anybody who was dumb enough to trail their stops there, right? Anybody who had their stops there. And then when it comes back up here, it's coming back up here. You got imbalances here, and you got this inversion fair value. I mean, not inversion fair value gap, this reclaimed fair value gap right there. See, because we used it, traded away, came back, reclaimed fair value gap there, and then we gave up the ghost right there. Right. So whenever you're bearish or bullish, right? So in this case, we're bearish. We left the lows, right? And then we came back up. You're coming back up to trick people in and take people out. And then we come back down and do the real move, right? Because anybody that got taken out, now they're scared to get back short again, right? They're scared to get back short again in here because price is just chopping, right? All price doing is just chopping. They're scared to get back short because they got taken out, right? Anybody that's long, they see this right here. Oh, yeah, I'm good. It didn't take out that low. Then, boop, there you go. Bust your head to the white meat. All right. And then on the long side, if we look at it from the long side right there, right, we come up here and we make relative equal highs, right? We come down, trick people in short, right? Push back up. Don't take out the high, right? Oh, yeah, I'm good. It didn't take out the high. Then we come back down, then boop, bust the head to the white meat. All right. Now, moving on. Everybody good on that? Everybody clear on that? That makes sense? Let me sip some water. Oakley dokley. Now, okay, so then we come down to consequent encroachment of that SIBI that we had traded up into. Right, we come down to consequent encroachment of that SIBI that we traded up into. That's a daily time frame. And then we what was this? Let's see what this was. Bearish fair value gap 415. Okay, that's something that I marked out. That was on the what time frame was that on? I didn't put a time frame. 15 minutes. Oh, speak, Lord, speak, Lord, speak to me, speak. I was so blind, speak. All right. So then once we hit that that consequent encroachment of that daily fair value gap, right? We come down, hit consequent encroachment, push back up, drop down, take out the low, right? Once we take out the low, we come up, trade above that high right there. Right, so now we're here, there, right? Now, this is for anybody who didn't really understand what I was talking about before when I said, do you understand what you can be looking for a signature that this right here is a fake me out off that rejection off the low. Now, the difference is the other one, we didn't have any displacement. This one here, once we came down and then we took that low, right? And we displaced up, right? fair value gap, fair value gap, fair value gap, right? We displaced up, right? So we come back up here and then back there at the prior low, right? We come back up there to the prior low right there, right? And then we trade back down into the fair value gap and the order block, right? So you got fair value gap there, bullish fair value gap here, and you got a bullish order block there, right? And also, not only do you got the bullish fair value gap and the bullish order block, so we'll mark out this bullish fair value gap here, okay? Not only do you have the bullish fair value gap and the bullish order block, we come right back down one more time to 50%, the consequent encroachment of that daily SIBI. Boom, hit it, and we displace away, right? Displace away, right? Before finally launching up, you see price pull back down one more time into that bullish fair value gap from 442. All right, let's move these macros down. All right, 250. So we're gonna go with 3, 2, 0, 4, 10, 0, 4, 50, 2, 0, 5, 10, 0, 5, 50, 2, 0, 6, 10, 0, 6, 50, 2, 0, 7, 10. All right, move them down. Okay. And so here, you see here during this macro time here, right? You see what I was talking about here on this macro time here, we traded down into an imbalance there, also taking out sell side, right? Then halfway through, we traded back up, right? Push past the imbalance a little bit, right? And then drop down again, right? Taking out the sell side and filling in the imbalance, right? See how we got that little double move right there, right? Came back down into the imbalance right there, right? Traded down into the imbalance. So in this macro right there, price was pushing more toward an imbalance because we spooled down to that imbalance. Yes, there's sell side there, but it's coming back to the imbalance because the sell side is down there, right? The buy side is further up and there. And then here we traded back up inside that imbalance, drop down into that imbalance there, right? Boom. And then we push up, right? Once we push up, we trade back down. Bodies of the candles are respecting what? The 506 BISI. I mean, SIBI right there. It's an inversion fair value gap. This 506 SIBI right there. When is that made? During the macro time, right there. So we got a macro inversion. Bodies of the candles respecting that. Touch the 442 BISI again. Push up, taking out the buy side. Once we take out the buy side, trade back down into 514 BISI. Right, push up, trade back down into the order block one more time. Right, reject off during this macro time right here. We trade down, right, come below these equal bodies, trade down into the rejection block, back down into this fair value gap and order block one more time. Right, this right here, running below these equal bodies right there. See that little, that's another example we was talking about before when we sweep liquidity below the relative equal bodies, right? When we come down below them bodies, nice rejection right there, right? Just ran and swept liquidity below those bodies there during this macro time frame, right? During this macro time, because right here during these candle closures, right? These candle closures on the closing time or the low from a close, right? This right here are the closes right here. These red candles right here, these are the closing times right here, right? So with there's a pivot right there. If you look at a line chart, it'll be a pivot there. Drop down below those lowest points, wicking out that liquidity there, right? And then price takes off, trades back up, right? Taking out this buy side, trading all the way up into right, we got that order block right there. Trades all the way back up into that order block. The body's respecting the opening price of that order block there. Drop all the way back down one more time down here into this SIBI, all the way back down into that same range down there. We have all kinds of stuff going on in here, right? We got BISIs in here, right? We got BISIs in here. We got consequent encroachment of wicks inside there, right? All this right here is during macro time, right? So we got macro time BISI right there, consequent encroachment of the wick, right? We trade back down, right? After running up there during this macro time, it's price spooling, taking out the buy side, get up there, trade back down into the BISI from this 550 to 610 macro, hit that BISI, price takes off, trades all the way back up to that 236 bearish fair value gap that we had created a long time ago. That's like our first time coming back up to it since we left it way back here. Came near, consolidated there for a little while, right? Then we pushed up, came back up to what is that? This is that consequent encroachment? No, that's 25%. That's 25% of what? What was this right here? What did we grade right there? I didn't put, I know this is a range right here, but I didn't mark out what that range was. What was that? Y'all remember what that was? Y'all remember what that was, why I marked it out? Who remember why I marked this range? What was this range for? Why did I mark that out? Do anybody know why I marked that out? I don't know why I marked it out. Oh well. That's my daily. It's my daily SIBI there. I remember this, but I don't know why I marked that out right there. That's gonna drive me crazy. If somebody can remember why I marked it out. I thought you said it was an order block. Was it? Was that a 4-hour order block? Was that a 4-hour order block? This was the order block down here. That was the order block down there. I'm trying to figure out, why did I mark out this? I don't know why I marked that out. I remember grading something, but I don't know why I marked it out. I don't know. It done pissed me off now. Get out of here. I don't know why I marked that. Okay, so then we came up. I don't know where we are, but we eventually came up. We're gonna come over here to the New York session, right? So we came up. Let's move this over. So coming over here into the New York session, market hour 8:30. That's our 8:30 time frame there. All right, 8:30 time frame there. So coming into the 8:30 time frame, squanch it up, or we can see where we are in price. We've already come down. We know everything that we did here. We've come back above this high there, and we traded back down into the range. Then we pushed back up, took out that high. Then coming into the 8:30, we traded back down into the range. So that's where we are there. And we traded back down to the range. We traded back down to this 236 inversion fair value gap there. Right. 236 inversion fair value gap there, trading down below these lows here. Right, trading down below them lows there. Right. And then that's an 844. Then moving into the 850 to 910 macro. Right, price spooled up, tapping into, nope, didn't really tap it yet. Yeah, so it spooled up, did not take out the buy side, retraced back down into this 855 Bissy, right? 855 Bissy, and then we continue to spool up, taking out the overnight high, right? Got above the overnight high. Once we got above the overnight high, consolidated there on at the 75%, the top upper quadrant of the daily SIBI and the overnight high, right? Coming in at 829, we started to drop, right? Start to drop down, going to the 930 open. Right, so now this is the 930 open right here. On the 930 open, we came down, did not take out the sell side, right? Did not take out the sell side, right? What did we say here? Remember earlier during the London or whenever that was? See what we did here? We dropped down. What did we say about this right here? The significance of leaving that sell side right there when you're bearish, right? What's the significance about that? Who remember? Who remember? Who remember? What did we do here? We came there, and then we went up there and did what? All right. What did we do here? Right. Price dropped down, left the sell side, turned around, took out the buy side, and what did it do here when we took out the buy side? Come on now, y'all talk to me. Y'all talk to me. What your notes say? Tim, why you always making us say this? Because I'm trying to help you and making it stick. Talk to me. Triggered stops. Took liquidity, right? So when you triggering these stops, so right here, you look, these are signatures you're looking at, right? Price comes down, fails to take out the stops, right? You in this case, you're bearish, does not take out the stops, right? Leaves it there. People feeling safe. Somebody trailed their stops here, comes up here, forces people long because they see good support there, forces people long. Anybody who was already short and had their stops there took them out. So you force people in, take people out, right? Force people in, take people out. Come back down. In this case, it did the same thing again. Came down, didn't take it, pushed back up, right? Came above these equal bodies, right? Took them out, hit that 75% one more time, right? Allowing smart money an opportunity to get short up here in a discount, right? Coming above all these equal bodies, right? Allowing smart money to get short up here in a discount, come down Gave a nice OTE entry right there at that 75%. Right, let's see if my calibrated eye still working. Right, let's see if it's still working right there. Boop. Right, go to OTE. Look at that boy. Look at that boy. Look at that boy. Extend to the right. Look at that boy. That boy OT. That boy I still calibrate. I don't like how that look. Let's just move this over. Up. Look at that boy. Look at that boy. What I tell you. Nice OTE entry right there. And dropped it like it's hot. Came all the way back down to that consequent encroachment of that daily SIBI. Consolidated there for a little while. Right? Dropped it again. Drop it like it's hot. 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 All the way up into 1040. Right? So from 1028 all the way to 1040, just a constant drop. Right? Just a constant drop. This right here was the OTE from there. Right? This right here was opportunity for smart money to get short above these equal bodies right here. OTE entry and then drop. Unless you trade order blocks. If you trade fair value gaps, really no. Well, yeah, there's a fair value gap entry here, right? If you trust that, right? Because we come down, right? We got a fair value gap right there, right? If you trust that, it's only one fair value gap there, right? We got immediate rebalance. Then you got an opportunity on a fair value gap, right? If you trust that off of that immediate rebalance, that would have been an opportunity. Then order block was the real opportunity to participate in the drop. And the rest of the day is nothing. And yeah, I'm tired of talking anyway. That's it, man. Price action, intraday price action recap is concluded. Do anybody have anything for me? All right. Does anybody have anything for me? Get me a sip of water. Uh-oh. I knocked everything down. Kashaya asked a question earlier. What's your question, Kashaya? Kashaya asked a question earlier. Sorry I'm late. Why was it considered a fake out at the... Yeah, I talked about that earlier. When I asked, I was like, do y'all know why it's a fake out? And then everybody said it was good. And then I came back later when we did like the same thing. And I was like, this is not a fake out. The last time it was because it was no displacement. We didn't have any displacement. It was showing you that it's really not trying to go up. It was just kind of, do. It didn't have displacement up. And I talked about that on the other time when it did a similar thing, but this time it actually was reversed. See, I'm Charles Xavier. I knew that question was over there without even having to look at the chat. Without having to look at the chat, I knew it was over there. All right, man. That's all I got. I don't see nothing in the chat. Irma, you good? You good, Irma? You got anything?
Nope, I'm good. Thank you. This was very helpful.
You're welcome. I'm glad it was helpful. All right, man. Y'all enjoy the rest of y'all night. Tomorrow is Wednesday, so it won't be no intraday price action. Mentees, y'all pull up with your hard-hitting questions at 7. All right. If y'all don't pull up with no hard-hitting questions, we ain't gonna do nothing. Don't pull up there with no questions. Be like, can we just do a price action recap? No, we can't. It's supposed to be the Q&As. It's my time. What's up? It's my time. That's my first time seeing that name. If this not your first time, I jalapies. But that's my first time seeing It's My Time. welcome. It's my time. Hey, that's it, man. Until the next time I see y'all, it's going to be Thursday. I'll see y'all here doing the overnight price action. Mentees tomorrow, 7 o'clock inside the Discord. Right? If you got questions, have your screen recording software ready, cause you know we don't record Wednesday nights. And yeah, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Aranya Grande, aka Big Spot. If you don't hablo español, y'all be safe out here in these trade streets, man. Gone.